Hey everybody, Boris Schlossberg from BK Forex. Welcome to our trade setup for 123. Dollar yen continues to dive in late Asia, early Europe. As always, past performance not indicative of future results. Trading Forex carries high level risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. And before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists you could sustain a loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. Information, including commentary and trade ideas, provided on bkforex.com should not be relied on substances for independent research, which should be performed before making your investment decisions. Information and opinions presented do not take into account your particular individual investment objectives, financial situation, or needs, and all investors should obtain advice based on their unique situation before making an investment decision. BK Forex LLC will not be responsible for any loss in current investments made by readers and clients as a result of this information, and we do not render legal, tax, accounting, or other professional advice. And such advice is needed, please seek professional advice. Big story of the day today, obviously, yen continues to liquidate into Asia. We took out yesterday, we took out basically early Asia, we took out the 88.50, had a small rebound, and then continue now drifting towards the 88. 88 is clearly a big number because that would really unwind that whole big move from 90 from yesterday all the way by two figures. And there may be some support here. As you can see, there's clearly a little bit of support in the chart here around the 88.18 level. We tested like 88.07, and I think there's clearly a lot of pressure to run the stops through the 88s. But how much more beyond the 88s we're going to go is going to be open to question. If you look at the longer time charts, if you go to the 4 hours, you'll see that that was something we talked about yesterday as being a natural support area here. I think the low here was what, 87.82. That's pretty much, that makes a lot of sense. Around the 87.80s is where I think you will find some initial support if the pair is able to break through the 88 handle. But obviously, pressure to run the barriers right now very strong as liquidation continues. Once 89 was given yesterday, it was pretty much all systems to the downside. And I think that's exactly what happened. There were rumored to be bids in the 30s and the 40s. All of those bids have been chewed through. Europe is opening up right now into what looks like further pressure to liquidate the yen crosses as we start the day. And one of the things that's actually weighing on this on the issue is the fact that the Aussie itself faced pretty weak economic data overnight. We had CPI data that came in markedly cooler than what the market expected. It came in around 0.2 versus 0.4. Aussie actually fell. This is the 4 hours. Let me go on the 30-minute chart, and you'll see that the Aussie just fell on the news in Asia. We broke the 40s, went all the way down to the 25s, kind of consolidated, barely sort of itching ourselves up to 105.40. But basically, the story out of Australia now is that you have a double distribution here at 105.7, and a possible, if we get further risk aversion, move down to test the 105 barriers. Aussie still very much remains in this 105, 104 barrier as you look at the price action here. But having failed continuously now to even rise above the 105.80, we really would need to rally above yesterday's high around 105.80 to kind of neutralize the negative bias and take the 106 out in order to really put a positive bias on the pair. For now, you have a very slow but steady negative bias on the move, and it looks like we could pressure ourselves down to 105, especially if Europe accelerates to the downside, or if the U.S. comes in and starts to push prices lower as the day progresses. So the 106, 105 barrier, the risk I think is to the downside to break the 105 before you can break the 106 as far as things stand right now in the Aussie. And obviously this is getting pressured as well on the Aussie yen cross, which has been liquidated continuously. And you see it being continuously liquidated now as the yen crosses start to come in. And the reason for that, of course, is lower inflation rate out of Australia suggests that there's possible further rate cuts, maybe not this month, but perhaps next month out of RBA. That makes Aussie yen even less attractive as a carry trade, and that's why you're seeing a lot of disappointment in the market as you start to unwind the move. So that's basically what's happening out of Asia as far as liquidation. Now into Europe, the euro actually also looking relatively weak. We just broke the 33 handles as we started to come into Europe. Clearly a little bit of stop running going on here. But the more interesting question is this level over here, this 32.65. There was a big spike low after the false rumor from Wiedemann yesterday. We recovered, could not really break above the 33.50 despite positive zoo news. That was a very negative sign, as I noted yesterday on Twitter. And I think what you're seeing right now here is further pressure to the downside. So if we start breaking lower, I mean, to me, the critical level here is going to be this level over here. The shorts are going to want to test the 32.50, but if 32.50 is given, which has been pretty much a shelf of support over the last 2 weeks, then that opens up, that basically creates a big distribution top with much lower highs continuously, and really opens up a full liquidation mode all the way down to 32, perhaps even 31.50 before we can even find any kind of support. So this is going to be a critical level at 32.50. If that breaks to the downside, it's gonna send a much more negative structure in the euro dollar as it stands right now. And lastly, cable has been holding steady. Cable is an interesting construct here as well, because cable has been holding steady around this, just above this 58 for the last day and a half. And as we noted, this was after having several weeks of very negative price movements. This is the 4-hour chart, right, that I'm showing you. Let's actually go longer and just show you. The reason why it's been just holding is because this level over here, we've had this level of support around the 58.20s. If 58 itself goes, and this is going to be a very interesting construct, if 58 starts to go to the downside, then it really opens up a move all the way up, possibly down to 57. So cable is just sort of pause, but by no means out of trouble, and a further test through the 58s could really push us much lower into the 57s as we go. In UK today, we have labor data that could be the trigger to the downside if the labor data comes in weak, as well as MPC notes. There's talk now about the idea of putting the referendum to send UK out of EU, which I think in many ways not really a positive construct for the currency, because if UK were to leave EU, the export-import market on which it depends to such an extent would probably be contained and curtailed, and there'll be a lot more trade barriers for UK to do business in Europe, which I don't think is going to be constructive for the currency, which is already very weak. So beggars can't be choosers, but it seems to be that they want to be. So UK at this point still looking very weak. One of the interesting side effects of all this is that the weakness in the euro and the relative strength, if you could call it that, in the pound has kind of arrested the recent rally in euro pound. We've been at around 84. 84.30 was the peak point here that we kind of topped out here, and for now that operates as the near-term top. So 84.40 is the near-term top. It's going to be interesting to see. It all depends on how much further deceleration we have in UK. If the cable is able to break the 58s, we could possibly retest this top. If cable is sort of staying stationary and the euros are weak, I think you start to see a move down in the euro pound. And for the near term, the sort of very near levels for the pound, where yesterday's let me just pull this up. Yesterday we had a spike low at around 83.70. We start to kind of break through that. That would suggest that this operating top at 84.30 is pretty much set for the near term. So watching that very carefully as a possible crossplay. And obviously euro yen also unwinding. Just as I went to print here, you see that it was testing the 17 handle. All of this really is sort of contingent, as I said, on the idea of where does dollar yen stop for support. If we can stop around 87.80, then probably further declines in the euro yen are going to be contained to the 16.50 level that we saw a couple of days ago. If the acceleration, if the liquidation accelerates, then we have much further to go. So that's pretty much how things set up for the day. Not too much action in the US. I think the Q is definitely going to be off the yen crosses as we go forward. So watching those very carefully into the US session. And obviously, whatever rumor mill comes out of Europe, whatever price action comes out of Europe, that will be the dominant trade here. For now, the key level for the euro is that 32.65 level to the downside. If we start to test that into Europe, we may be actually setting ourselves up for much further downside action as we go forward. This is Boris Schlossberg, over and out. Best of luck.